The first half of the year is almost over. To say that the housing market is going through a shift would probably be an understatement. Hey guys, my name is Mac Rogers. I'm a real estate broker here in the San Francisco Bay Area. Welcome to the channel. For those of you that are subscribers and might have noticed that I haven't posted a video in a couple of weeks, it's because I finally got or caught the dreaded coronavirus. But don't worry, I'm back.
I'm back, baby!
Anyway, let's look at the big picture and see what is really happening. This is kind of the breakdown of what I want to share with you today. The first one is the number of offers received are going down. The second one, the number of offers over asking is also going down. The third one, the number of sales is also going down. And the fourth one, inventory is increasing. I may be jumping all over the place, but I'll make sure that I cover all these things in today's video. First, let me tell you about home prices. Even with rising mortgage rates and record inflation, guess what home prices are doing? Yep, you guessed it, setting new records again. For the first time in history, the median home price in the US hit above $400,000. That is almost 15% increase from 1 year ago. People keep wondering why, with higher mortgage rate and higher inflation, why prices keep going up. Well, the simple fact of the matter is that our housing market inventory or supply really needs to catch up, meaning we need to build our way out of this, which also means this whole phenomenon is not ending anytime soon. Take a look at this graph that I have here. The top three lines are inventory levels from 2017, 2018, and 2019. This was our inventory levels prior to the pandemic. The orange line is our inventory level during the pandemic. And the bottom two lines, the green is 2021 and the dark blue is this year's numbers. This is why even with all the things that are going on, home prices continue to climb. We are not out of the woods yet in terms of inventory. There is definitely an increase, but not a lot. Mark Fleming has this to say about inventory. There has been a pickup in inventory that we've seen recently, but it's not from a big increase in new listings, but rather a slowdown in the pace of sales. Now, make no mistake about it, things are changing. More homes are coming to the market and demand is softening, but not to the extent where we might be in danger of a housing market crash. At least not yet. According to the latest from the National Association of Realtors, existing home sales retreated for the fourth consecutive month in May. Month-over-month sales declined in 3 out of the 4 major US regions, while year-over-year sales slipped in all 4 regions. That's where the slowdown is happening. Transaction numbers, not price. Here are the actual numbers. Total existing home sales that includes single-family homes, townhomes, condos, and co-ops dropped 3.4% from April to a seasonally adjusted annual rate of 5.4 million in May. Year-over-year sales decreased almost 9%. These numbers are actually numbers we saw pre-pandemic, which during that time, everyone in the industry was saying the numbers are amazing. Another thing that's going on is that the sales of single-family versus condos are almost the same. NAR said that this might imply that the preference towards suburban living over city life that had been present over the past 2 years is fading with the return of pre-pandemic conditions. I think that is true, plus the fact that condos are a little bit cheaper than single-family homes. So buyers that are getting priced out are opting for condos and townhomes. Another shift that is happening is in inventory. At the end of May, it was 1,160,000 units, or an increase of 12.6% from April and a 4.1% decline from the previous year. So increased month to month, but still declining year to year. And because of this increase in month to month inventory, unsold inventory sits at 2.6 months supply at the current sales pace, up from 2.2 months in April and 2.5 months in May of 2021. This means that it's taking a little longer to sell a house. Normally, or on average, we like to see inventory in the 6-month supply range, and we hadn't had this since 2012. The expectation is that sales will further decline in the coming months because of housing affordability challenges from the sharp increase in mortgage rates this year and higher inflation. However, and this is very important if you are a seller, homes priced right are still selling quickly, and this is why inventory levels still need to go up substantially. substantially. We need almost double the inventory that we have right now to cool off home prices and really to provide more options for home buyers. What this means is that you cannot price ahead of the market anymore and expect it to still sell. For example, here in my neighborhood, last year the median price was around 1.5 million. On a rising market, you can probably get away with pricing your home, say 1.6, 1.65, and still expect it to sell within a month or two. Now, if I were pricing it or giving advice to a home seller, I would suggest pricing it at 1.5 exactly or 5% less to attract more buyers. So pricing is key. Let's get back to our numbers for a minute. The median existing home price, as I have mentioned, is over 400,000 for all housing types in May. It's actually 407,600, up 14.8%. This marks 123 consecutive months of year-over-year increases, the longest running streak on record. Next month, I'm not too confident to say that we see this increasing again, but the chances are still good we see this goes up. Properties typically remained on the market for 16 days in May, down from 17 days in April and 17 days in May of 2021, with 88% of the homes sold in May of 2022 were on the market for less than a month. These are still fast numbers, but there are a lot of areas where these numbers are starting to increase. The number of first-time home buyers accounted for 27% of sales in May. This is way below the 34% average from 2021. All cash sales accounted for 25% of transactions in May, which is slightly up from 23% average for 2021. Distressed sales like foreclosures and short sales represented less than 1% in sales in May, essentially unchanged from April of 2022 and May of 2021. While distressed sales are still not an issue, I'm starting to have this feeling that it might become one, mainly because of all the talk of a recession. Right now, homeowners have a lot of equity in their homes, and this has been the argument against a foreclosure crisis. But if people start losing jobs and they need to start selling their homes, this could easily snowball and we could easily see prices come down. And if prices start coming down, there could be a lot of homeowners that are or could be in danger of losing equity and could get forced into foreclosure. Let's look at the number of offers received. The number of offers received is starting to go down because of higher interest rate and inflation. However, I have to put it into context. The average before was a seller was receiving almost 6 offers. Today, the average is down to 4 offers. So clearly, we have less buyers out there, but as you can see, it's still not even with inventory. I mentioned earlier as well that the offers above asking are going down. Before, we were getting 61% of offers above asking. Now it's down to only 55%. That is still a majority of the offers. This is why I tell my buyers that it's still the same out there. It's still highly competitive, but things are slightly changing. That's the overall picture for what's going on in the housing market. For my California viewers, I want to share with you the latest numbers that we have from the California Association of Realtors, and then I'll end the video with what I think will happen in the next couple of months. At the regional level, all major regions declined in sales from last year, with 4 of the 5 regions falling by double digits on a year-to-year basis. This is just like what is going on a national level. The Central Coast regions continued to have the biggest decline of all regions, with sales dropping 21.8% from a year ago. Southern California down 14.3%, Central Valley down 12.2%, and the San Francisco Bay Area down 11.5%. The far north down 4% was the only region with a more moderate decline year over year. A majority of the counties being tracked by CAR experienced a decline in sales from a year ago in May 2022. Plumas County dropping with the most at 46.3%, followed by Mono down 33% and Santa Barbara down 29%. Not all counties are experiencing a decline. Del Norte is up a huge 200%, the largest sales growth from last year, followed by Siskiyou up 53.5% and Mariposa up 50%. On a year-to-date basis, Plumas had the largest decline in sales, 35.5% so far this year, while Yuba, 41.2%, continued to have the best sales performance for all counties. In terms of price, just like on the national level, this is not going down. Regionally, all major California regions increased in price from last year by more than 10%, with the far north in Southern California setting new record medians in May. The far north also had the highest year-over-year growth in price with an increase of 16.4%, followed by the Central Valley up 12.4%, the San Francisco Bay Area up 12.3%, Southern California up 11.9%, and the Central Coast up 10.6%. County-wise, there were 5 counties that saw their median price go down from last year. Santa Barbara dropping the most at 30.7%, then Mono down 23.7%, and Del Norte down 22.9%. Inventory is starting to improve. Right now, we have 2 months supply of home. This is partly due to actual increase in supply and a slight decline in demand. Again, this is tracking our national numbers. Yuba had the biggest increase in supply with an increase of 191.8% in active listings from last May. Placer up 108%, Nevada up 106%. And right here in the East Bay, where I'm from, Contra Costa County, 102.4%. On the other end of the spectrum, 7 counties declined in for sale properties when compared to the same month last year, with Del Norte dropping the most at 30.5%, followed by Plumas 26.6% and Napa 23.9%. The median number of days it took to sell a California single-family home was 9 days in May 2022 and 7 days in May of 2021. This is still fast, but it's slowly starting to climb back up. I would say kind of normalizing. That's what's currently going on in the real estate market nationally and here in California. I expect more of the same in the coming months. I think the danger right now is the economy. If we do end up in a prolonged recession and people start losing their jobs, it doesn't matter if you have equity in your home. Once sellers starts heading to the exit, it could cause prices to go down slightly. Right now, there is no threat of that yet. Hey, it's nice to see you again. Thanks for watching. Have a great day.